Hey guys, Aaron here with Carnivore Trades. So I want to talk a little bit today about how to use the inside bar pattern to spot a bear trap or a bull trap. Works on both sides. I go over the inside bar pattern extensively in my course, Carnivore course on carnivoretrades.com, where I talk about price targets, how to calculate it, exactly how to trade it. But in this instance, I've heard a lot of people bearish on the dollar this, kind of the whole way up. In fact, if you remember down here, it was all about de-dollarization. And I said multiple times on my channel, if we get above these certain levels, we're going to squeeze. And I'm going to show you why that happens here on the DXY. And you guys, if you follow me, I always talk about, wide range bars on, especially weekly closes. I'll say, if we close above this, this is going higher. If we close below this, it's going lower. But this is how you do it here. So again, we had a big move down here in the dollar. Big sell-off, and everybody got bearish down here. Even I said, look, if this is, if this doesn't shape up, you're looking at the mid 90s most likely. This big support level down here. There's a little pivot at 97.50, but this can really go down if it doesn't turn around here. So we sliced these pivots, and then it actually started to float back up. And as it started to float back up, we started to come back in, and then we put in this little, again, an inside bar pattern right here on the daily, bullish inside bar, little pattern there. And I said, okay, guys, I'm not saying that the dollar's gonna rally, but it will rally if we close the week above 102.56. I said, if you will get a short squeeze if that happens. Why did I say that? This is your breakdown bar. This is what I would call an inside bar. An inside bar has to be a wide range candle. It can't just be it's something like this. It can't be a doji. It's got to be a big wide range candle. I would consider that one. This is one. That is one. Okay. And it represents power, right? So it's wide range. It represents a big thrust. So when you close above one of those, does it take a lot of energy or does it take a little bit of energy? Obviously, it takes a lot of energy. It takes a lot of institutional participation to make that happen. So back here, I was saying, guys, we're getting kind of close to this high. I know people are still bearish the dollar. We're still below the 20-week moving average. Even on the daily, yeah, it's had a nice rebound, but we're still below the 50. And I said, if we close the week above that pivot, watch out, the dollar is going to squeeze, and it did. Additionally, the next level I looked at was 103.75. Why? Because that was your last bear flag, bearish inside bar on the weekly. That broke down, and when you get back above these levels on a weekly close, it traps the shorts, and then you squeeze higher. And people were telling me, the dollar's going down, the dollar's going down, dollar's going down. I said, no, the dollar's going to continue squeezing because it is so, I can't tell you how powerful it is when you get above these levels, especially on a weekly close or a weekly chart. So DXY really powering up here. A couple of other times earlier this year, we traded the DXY on the long side. We basically picked the low off here in January, took half off somewhere in this area here, and then we had it, what's this? An inside bar, right? And I said, okay, guys, the new stop out is in the money, and if we close below this candle on a weekly, we just stop out and we'll look at it later. Well, what happened? We closed below that on a weekly, and guess what? It went lower. We picked the low off down here. Again, we got a nice pop. And then guess what? Inside bar pattern starts to consolidate. It closed below the low. So what do you think I did with the second half of my position? I moved out. 1, 2, 3. It's a funny thing. I talked about this daily too. So you had a bullish inside bar and then a failure and then a bearish inside bar right there that played out to the downside, right? So as soon as we stopped out here, consolidation and then a nice slice down. Additionally, on the other side of that trade, you can look at a bull trap too. So a lot of the time when you're at a major extreme, bull patterns can fail. And you had a nice bullish inside bar here on the dollar, but look, after a monster run up. So sometimes it just, buyers get exhausted and they fail to break it higher. What happens here? Big power bar, nice inside candles, big thrust lower, outside move down, closing well below that low. What happens here? Buyers are trapped, right? So that is a bull trap, and then it's kind of like this run for the exits at the same time. And that's why you get those big power moves down. So that is kind of what one thing you can look for traps. Obviously, there's many other ways to look at them, but this is one of my favorite indicators. You guys hear me talk about it all the time, every day. I always say, oh, watch this stock, watch this level. If it closes above this, it's going to squeeze, or if it closes below this, it's going to break down. This is what I'm referring to here. And again, inside bar is one of my favorite patterns. If you're interested in that, or if you want to go check out the course, go do that. But let me know in the comments. Maybe I'll do a video on inside bars specifically, and get a little bit more in depth, because it is a very powerful pattern to trade. So anyways, guys, gonna wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all later.